Segment 3, the Fed. Fed's response to the crisis. Ben Bernanke helps engineer the takeover of Bear Stearns by J.P. Morgan, supports the seizure of Fannie Mae and Freddie Mac, agrees to the $85 billion rescue of AIG, helps Treasury Secretary Hank Paulson convince Congress to approve the TARP, and since then, the Fed has kept interest rates close to zero and engaged in the purchase of mortgage bonds, driving down the long-term rates and swelling the Fed's balance sheet to some $2 trillion. You grade that.
Well, some of those things I think were desirable, and some not so. That if you asked Milton Friedman, who was my teacher, one of the great economists of ever, but certainly of the 20th century, he always said that if we have a financial crisis, he thought about it, you need a very proactive Fed. They should be, buying assets, creating money. I mean, that's what they're doing: creating money, creating bank reserves. Hopefully, we'll create money, and putting pressure on interest rates. So some of that I think was desirable and important to do. Now, was it all desirable? You mentioned like 6 or 7 different things that they did. Probably they went too far in the TARP program. They shouldn't have done as much. On low interest rates, probably desirable to push interest rates down to some extent, although and to buy bonds. Unfortunately, they create a lot of excess reserves of banks, now well over $1 trillion worth, and they may go higher if they get QE2, and that didn't stimulate much bank lending. So the question I would ask is, with all these reserves that banks have now, why aren't they lending more? That, to me, is a really important question.
So there's the banks have more than $1 trillion on their books in excess of their legal requirements.
Right.
That's what, and yet they're not lending. So we know the problem is not a lack of liquidity.
Absolutely.
We know that.
Yeah.
And is Bernanke now, he's signaled that he intends to keep interest rates low. He gave a speech earlier in October suggesting that he's willing to go on buying mortgage bonds to keep the long-term rates down.
Yeah.
Is that foolishness, misdirected effort?
Yeah, I wouldn't support the QE2. The second,
QE2 is the
second quantitative easing. That's what they call QE2. I wouldn't support that now. I think the banks have the. I don't think creating more bank reserves is going to increase lending. I think you have to think of the lending problem from a different direction, and maybe the outcome of the election in a few days will help in that regard. I think businessmen, and particularly the potential borrowers and investors, got frightened by a lot of the legislation that was being passed and being proposed by the new Congress and by the president. They got frightened by the health care bill, and I think it's a bad bill. For a variety of reasons. It raised the cost of business, particularly small business. They got frightened by that. They got frightened by the talk of increasing taxes on higher income, what they call rich people, but higher income people, let's say. They got frightened by the discussions of a tax on carbon. They got frightened by a discussion that we're going to tighten up on antitrust policy and investigate business more closely. They got frightened by the attempt on discussions of consumer protection, which was embodied in the Financial Reform Act. They got frightened by Obama's continual discussion of those billionaires and how we're going to be against the billion. I've met with some businessmen recently, some dying-wool Democrats, very wealthy people, who said this time they're voting for the Republicans. I mean, the attacks on business. And well, given all that, I think business has been hesitant about hiring more and expanding in that kind of environment. And I think if I had to put my finger on a single factor that in my judgment was most responsible for the fact that we didn't get more lending, I think you didn't get a big demand from small and medium-sized business that they wanted to expand in this environment. I think that's been a really major problem for the United States. And until we correct that problem, I think we're going to have a slow recovery.
Gary, your friend, economist Alan Meltzer, wrote in the Wall Street Journal recently President Obama could do more for the economy than Fed Chairman Ben Bernanke by declaring a 3-year moratorium on new taxes and new regulation.
Well, certainly on the new taxes, I agree. The only regulation I would like to see that imposed, that we raise the capital requirements on banks, particularly on the too-big-to-fail banks.
I see.
We have higher capital requirements so they can't expand as much as they did during this situation. Now, they've always had capital requirements, so this isn't saying, well, let's start regulating something that we didn't regulate. I think they were insufficient. So that would be the one regulation I would like. On the other hand, I would like to take away some of the additional regulations that's embodied in the Financial Reform Act that gives a lot of discretion to regulators. The regulators were bad during this crisis. What makes one think they can be any better? So you want rules,
right?
Not discretion. So I would have a simple rule about capital requirements, that I would have, but I would at the same time not simply add any other regulations. I mean, I don't know of any others that I want, but I would reduce some of the regulations that we have. I would take away some of the power from the regulators.
I can recall having dinner with Milton sometime in the 90s when the economy was doing very well. And Milton was particularly cheerful because of the gridlock in Washington. We have a Democratic president who wants to give money to his people, and Republicans in Congress who want to give money to their people, and they won't let each other do that. If Republicans win in a major fashion, we're recording this a week before the election, do you expect the economy to improve?
Yeah, I agree with Milton. I mean, I don't think...
Gridlock will come back and help us, and gridlock will save us.
Yeah, generally, neither party has done too well when they had... I mean, there are exceptions to this rule, but certainly for those of us who believe in small government, lower taxes, less regulation like myself, gridlock can often be useful in the sense that you make it more difficult. You don't make it impossible, but you make it more difficult to greatly expand the role of the government. And I think that's good for the United States. It's good for most economies, but given the situation in the United States now, it's certainly good for the United States.